Private money is like the gasoline on top of your real estate investing fire that will just make it blow up. And in this video, I'm going to cover all things private money, where to find it, what to say to these people, and the paperwork that's involved. Most investors see getting access to private money as the holy grail in the real estate investing world. And in a way it is. Having access to private money can help you go from just wholesaling deals and transition to house flipping and maybe transition to doing some long-term holds via the BRRRR method. But before we get started, make sure you smash that like and subscribe button so you don't miss out on any future videos. All right, let's dive in. One of the biggest objections I hear first-time house flippers say is, no one is going to lend me money because I'm inexperienced, I haven't done a deal yet. But what you have to realize is that so many people want to get into house flipping, but simply don't have the time or the knowledge to do so. If you are able to gain the knowledge to help you speak confidently and simply to a potential private money lender, in that moment of that conversation with that person, you are the one that is seen as the expert and the one that will have credibility with them. And another objection that I hear is, well, what if I don't have a deal or I don't have the experience and they ask me about that? What do I say then? And honestly, that's perfectly fine. And here's why. With private money, you want to build the relationship before you borrow from it. Think about it in real life. If you met somebody on a Monday night, you don't want them asking for $20 towards the light bill on Tuesday morning. That would be completely off-putting, right? And that same thing goes with building a relationship with a private money lender. You want to cultivate these relationships with these potential private money lenders before you meet them, because that way it'll be a lot easier to borrow the money in the future because you won't be wearing the scent of desperation, and nobody likes how that smells. If they ask about your experience, here's what you can say. I haven't done any deals yet, but I'm on target to close 5 deals in the next 12 months. I'm plugged into a coaching and mentoring program that will help me get there because they have the experience and they are sharing that experience with me. Now, if you're a part of my 12-week house flipping accelerator program, that won't be a lie, right? And secondly, you can show them a deal that you're working on. Maybe there's a deal in the MLS that you found that you are analyzing, or maybe there's a deal that you put an offer in and you're waiting to hear back to see if your offer was accepted. Those are example and potential deals that you could use to pitch the private money lender, and that way they can get an idea of how you analyze deals and what their potential return on investment would be. Now, a lot of you newer house flippers put private money lenders on this pedestal, right? And you need to take them off this pedestal. You need to shift your mind and understand that you are helping them just as much as they are helping you. You are presenting them with an opportunity to earn an above average return on investment with their money that is secured by real estate, and it is not subjected to the ups and downs of the stock market. And you're giving them an opportunity to have a truly passive investment. Private money lending is the true mailbox money. Now that I have helped you to overcome some of those mental objections that you might have concerning private money, let me talk a little bit about why raising private money is so important. Private money is so important because it helps you to fill in that gap and bring that skin in the game that most hard money lenders want you to bring to the closing table. And here's what I mean. So here's how hard money lending usually breaks down to first-time house flippers. They'll usually give you maybe 80% of the purchase price and 100% of the rehab, or they might give you 90% of the purchase price and 100% of the rehab, or they might give you like 90% of the purchase price and 90% of the rehab. There is never usually 100% financing when it comes to new investors getting a hard money loan. Right now you're probably thinking, but Crystal, I hear all this talk about how to get into real estate with no money and using other people's money. So what exactly are they talking about? And this is where private money, sometimes referred to as gap funding, comes into play. Those private money lenders that you reach out to will help to fill the gap that your hard money lender is expecting you to close. So for example, I said that some hard money lenders may lend 90% of the purchase and 90% of the rehab. So they are expecting you to bring that 10% difference in the purchase price and 10% difference in the rehab budget. And that's where your private money lender can come in and give you those funds so that you could fill that gap that is needed for you to actually close on the property. And that way you are getting 100% financing. So let's talk about where to find potential private money lenders. First things first, private money lenders are individuals and they are not institutions. There's a lot of individuals out here who are aware of the various hard money loan programs and will be a broker between those hard money companies and yourselves. And unfortunately, a lot of those hard money brokers label themselves as private lenders and as private money, and I think that is extremely misleading. They'll go inside of these Facebook groups and say, hey, I'm a private money lender. I just need you to fill out this short application, send in your application fee for $500, and that will get you locked in and you'll have access to my private money. Now, if you come across anything like that in a Facebook group or social media, do me a favor, put on your track shoes and run. Those are usually scams. To find true private money, you need to network with individuals and present them with opportunities, which means you need to be good at finding and analyzing opportunities. Here's 2 simple ideas to find potential private money lenders. Number 1, attend different real estate investing association meetings in your city and network with the individuals there. Or you could network with people in the different social and professional organizations that you are involved in. And secondly, we all have that one friend in our friend group who just seems to be social and knows everybody, right? So make sure that one friend knows what you're up to in regards to real estate, and usually they can help you get the word out. Now, when you meet these potential private money lenders, they usually fall into one of 2 categories. The first category is what I call folks who are in their growth phase, meaning they are looking to place their money in something a little bit more aggressive that will help them accelerate the growth of their money. So these folks are more likely looking to actually partner and JV with you and actually earn a percentage of the profits. Now, the second category of folks are usually those who are in the money preservation phase. These are people who have maybe saved up some money and are later in their investing career and are like, look, I just want to preserve the capital that I have built up over the years. I'm not looking for anything super aggressive. I'm looking for something that is reasonable and safe and that will help me keep up with inflation. And those people are usually okay with just an annual return on their money. And to me, those are the type of individuals that are the best private money lenders. Now, let's work on what you say to these individuals once you meet them. And this is usually called your elevator pitch. I'll share with you 2 simple lines that I use over and over that work like a charm. Number 1, I show people how to make money from flipping houses without dealing with a contractor. That is definitely gonna perk somebody's ears, and they're definitely gonna wanna know some more information about that. Second line that I use that works like a charm is I show people how to make money in real estate without having to deal with tenants, toilets, termites, turnover, and trash. And trust me, that one works like a charm too. Most potential private money lenders will pull their money from a self-directed IRA, a 401k, a cash value life insurance policy, maybe a home equity line of credit that they have, or simply money that they have in a checking or savings account. Now, once you find these people and they are interested in what you have to say, here's a couple of things that you're going to want to share in that conversation with them. You're going to want to share a little bit about yourself, your company, maybe what your overall plans are, where you plan to target deals at, what city, maybe what type of deals you plan on targeting. You also want to share with them your plans for the property that you are going to borrow their money for. And you want to share with them the numbers, maybe some simple numbers like the purchase price, the ARV, the rehab budget, and then share with them the most important thing that they care about, which is the cash that you are requesting from them, the cash that is needed for the project, and what their return on investment will be once they get that money back. Now, once they decide, hey, this seems like an awesome opportunity, I would love to invest, here's some of the paperwork that is involved. First thing is what is called a promissory note. And this is basically a promise to pay. And this promissory note usually outlines the terms of the investment. So it'll usually outline how much you're borrowing, what the percentage rate is, and how long you plan on keeping the money. And this promissory note is something that the lender keeps. That is not recorded against the property. But what is recorded against the property is what we call in California a deed of trust, or if you're in another state, it might be called a mortgage. And this piece of paper is the security instrument against the property, and this piece of paper is actually recorded against the property, and it pretty much puts any and everybody on notice that, hey, this person, you owes the private money lender money, and it is secured by the property. So that is the purpose of the deed of trust or a mortgage. So another way you can protect your private money lender is to add them as an additional insured on your hazard insurance policy that you have on the property you are flipping. And then another type of insurance that you could get is a lender's title insurance policy, which will protect the lender if there are any future claims against the title of the property. And then the last thing to discuss with them is the terms of the payment. And there's usually two ways that is structured. Either giving the lender monthly interest only payments, or instead of giving them payments every month, you could let those payments accrue and let those payments build up, and you could pay them one lump sum at the end of the process when you are selling the house. So once you rehab the house, they'll add up all the money that you owe them, and then you could pay them back through escrow once the property is sold. Let's summarize what we talked about in this video. Number one, you are helping the private money lender. So I know a lot of times you may have these private money lenders on a pedestal, but you are creating a win-win situation for them. You are just as valuable to the transaction as they are. Secondly, you can find potential private money lenders at various networking events and some of the social or professional organizations that you might be involved in. Thirdly, once you find these people, be sure to have your elevator pitch ready, that 1 or 2 line statement that is going to pique their interest and want to learn more about working with you. Fourthly, you're going to want to show them the numbers of the deal that you are seeking money on, and if you don't have a deal in mind, you could show them example deals. Then after that, you want to make sure you talk to them about how their money is protected via different paperwork. And then lastly, agree to a payment structure. Are you going to pay them monthly or let the interest accrue? Now, the most important tip I want to leave you with is to be impeccable with your word. Do what you say you're going to do. Build that trust factor as much as you can, because trust me, most times private money lenders may say, oh, I only have $50,000 to give you, when in fact that $50,000 is just a test to see how you will handle that amount. And then once they see, oh, this person is very good with my money and protecting me and explaining the process, let me throw in an extra 100 or 200,000. And if not, they will definitely refer their friends to you. So let me know in the comments, what was your biggest takeaway from this video? If you haven't already, be sure to like and subscribe, and check out my video about probate investing. I did a video about explaining the California probate process using Chadwick Boseman's estate as an example. So be sure to check that out, and I'll see you guys next time.